Welcome to SNN Live. We're broadcasting from our studios in Los Angeles, California. I'm your host, Robert Kraft, and with me today is David Neibert from Concierge Technologies. It's a publicly traded company. The symbol is CNCG on the OTCQB. David, welcome to SNN Live.
Thank you, Bob. Thanks for the invitation.
It's great to have you on. So, for our audience, let's start off with an overview of the company, and we'll go from there.
Concierge Technologies, though originally founded in 1996, took on its present form in 2015 when our CEO, Nicholas Gerber, became involved in the company, invested some capital, and set us on a path of a diversified holding company rather than a single-purpose firm as we were before. So since 2015, we have been very busy acquiring operating subsidiaries, turning our earlier company, which may be a couple $100,000 in revenues, to now a $30 million company.
So I want to take a step back into the history since 2015. How did you develop from there to where you're currently at today?
It started with a vision of acquiring a particular profile of operating company. We had a bit of money to work with, and what would we buy with it? Where would we invest the money? So we looked for mature companies with in-place management, something easy to understand, something not particularly susceptible to disruptive technologies entering the marketplace. And we identified those companies. I got a stack of them on my desk. We started sorting through and found the ones that best fit the profile and went from there.
So tell me a little bit about the 4 subsidiaries that are currently in the holding company right now.
The first one we acquired, Gourmet Foods, that's interesting. That was in New Zealand. So you wonder, why in the world would a technology company, which is what we were known as prior to our reorganization in 2015, why would we have an interest in meat pies in New Zealand, of all places? And I remember that question being asked of Nick, and he said, why would you want to make meat pies? And his answer was, we don't make meat pies, we make money. So over to New Zealand we went, and it's a very nice company. They hold a very respectable market position in New Zealand for iconic meat pies. They have 32 different varieties. They sell to all the gas stations, convenience stores, grocery store chains, places where you'd find similar well-branded products in the U.S., you find the gourmet food products in New Zealand, marketed under the names Pat's Pantry and Ponsonby Pies. It's a well-known company. They have solid management, have about 45 employees in place, and they continue to grow since 2015.
And David, what about the other 3 companies that are currently in the holding company as well?
We use pretty much the same methodology as I described for Gourmet Foods. The next one up was Brigadiere Security in 2016, and Brigadiere Security Systems, with offices in Saskatoon and Regina in the province of Saskatchewan, is the largest authorized dealer for SecureTech, for alarm monitoring. So with over 13,000 customers, they're profitable, they're a great company, we're happy with that performance, and it's growing. From there was our biggest bite of the apple. We took on Wainwright Holdings, which is an investment fund manager with roughly $3 billion under management, and that was a stock-for-stock transaction, and also a company that was controlled by Nick Gerber. So he acquired some more share of Concierge in the transaction, but meanwhile, Concierge picked up about $22 million in revenues per year, and they operate 15 ETFs, exchange-traded funds, such as United States Commodities Fund, one of the well-known funds trading on the commodities market today. Wainwright was the latter half of 2016. And then our newest acquisition is Original Sprout. They're located in San Clemente, California. And they're a manufacturer and distributor of vegan, 100% natural hair care, shampoo, skin cream, throughout the United States, actually throughout the world. They're globally distributed, Singapore, Malaysia, the UK, we're in Harrods. We're the only shampoo in Disneyland because it's safe, tested 100% safe, so they put us in their Bibbidi Bop boutique stores. So actually, that's only 6 months ago, 7 months ago, we acquired Original Sprout. We have moved our corporate office, which means my office, into the Original Sprout facility in San Clemente. And I've paid particular attention to Original Sprout over the last few months, and we see a huge growth potential in that segment. And that's the 4, and we're looking for the 5th as we speak.
So, based on what you explained, you can tell that the company itself is really sector agnostic. So, what then is your criteria for potential new acquisition to bring into the company?
Well, number 1 criteria is it has to make money. We don't do startups. We don't envision putting a lot of cash at risk to grow a company. We want to start on third base, not first base, and it needs management. Other than that, you get down to details. Can they pass due diligence? Can we audit them and come out with a clean audit? We are conservative in our approach. We make sure that the management team are honest. We can trust them.
So what makes the company unique amongst your peers in the microcap space?
I think in the microcap space, most of the growth that occurs if you characterize yourself as a holding company, which there aren't that many of in the microcap space, are reliant upon debt or equity raises to fund their acquisitions. So they're sort of taking other people's money, putting it in a pot, and then investing it for them. And our chairman, Nick, who has been a professional investor for years, for decades, has taken a different approach. We have this investment fund business that, when the markets are up, generates quite a bit of cash. So we have access to a cash pipeline that, instead of reinvesting or dividending out to shareholders, we use that for our acquisition strategy. So we have this pipeline to cash that we've been able to tap that allows us to grow not only organically, but really from within, just diversifying it to another sector, so that we're not reliant on the capital markets. We don't have any debt. I think that differentiates us right there, is we're debt-free, and we really don't have a need to go out and raise money or take dilution through equity, unless the opportunity arose for just a fabulous transaction that we didn't have funding for. Otherwise, we're perfectly able to motor on and grow organically and continue our strategy.
Mm-hmm. And I know another thing that that potentially our audience might look for when they're assessing a holding company is experience and your background. So what's your background, and also a bit about the team's background as well?
My background is pretty varied, but always on the management side of things. And if I had to gauge what my strengths are, I would say that it's in operations. It's people management. It's making a business work, to make it click from within. So I'm sort of the front man that will go out and do the due diligence, meet the management teams for our target acquisition companies, follow after acquisition with onboarding. And I've been doing this before joining Concierge as a consultant since the mid-90s. Prior to that, I was doing mergers and acquisitions for another public entity, and we did, I would guess, maybe 50 over the course of 5 years. So I think that's a good match and a good pairing with Nick, who is an investment manager. He's been managing investments. He founded the Ameristock Fund, and he has some very great ideas on where to invest money and how to get a return for shareholders. Stuart Crumbaugh, who's our Chief Financial Officer, a CPA who has handled the finances of companies much larger than this prior to joining the company in 2016, I think brings a particular expertise to our public reporting responsibilities. We work well together. Stuart and I, as well as Nick, form the basis of the team. Of course, we have compliance officers who are constantly monitoring what goes on with the investment funds, as well as our SEC reporting. We not only make money, we do it in a professional and transparent manner that I think helps bring our target acquisitions to us. It helps them trust in us, and I think our long-term shareholders, which I mentioned we've been around for more years than just back to 2015. A lot of those shareholders are still here, and they're still here because the management team, I think, is available. We're transparent. They believe in the company, and we intend to keep that going.
From what you can tell me, what are some of the company's growth drivers moving forward?
Well, the company's growth is certainly through its operating subsidiaries, each of which have opportunities in their own respective marketplace. For Concierge Technologies, the holding company, our growth is not only through our current subsidiaries, but continuing our strategy of acquisitions. And for the next short term at least, we have several of those possibilities on the board, and we intend to continue that strategy for the long term.
And David, where can our audience go and find more information about Concierge Technologies?
I suggest the website, conciergetechnology.net.
I'm your host, Robert Kraft, and I'm coming to you live on SNN Live, where we're broadcasting from our studios in Los Angeles, California. With me again is David Neibert from Concierge Technologies, publicly traded company. The symbol is CNCG on the OTCQB. David, thank you for joining me today.
Thank you.